Hi everyone, it's Evan from the Trade Risk on Wednesday, September 9th here with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, some leading sectors, and then get into some individual names. Now we'll jump into the action today real quick with the SPY ETF that tracks the S&P 500, and today we put in a bearish engulfing day. And what that means is we closed up above yesterday's highs and we closed lower than yesterday's lows. So we effectively engulfed yesterday's trading action and we did it to the downside. It was a bearish engulfing bar. So today we opened up what looked to be a nice positive rosy day for the bulls. We were gapping up. We did gap up about 1% this morning, but notice where we gapped up to. It was right here at last week's highs, and it was at this kind of critical level of resistance. And this again level, this dates back to the levels back here from January and February earlier of this year. This band of resistance now, which has turned into resistance between 199 and call it 200, is sort of that overhead resistance level that we've been talking about for some time now, especially with the members here at the Trade Risk. So when we opened up at that level this morning, we would have expected a fade to happen. We would have expected price to sort of struggle here. We don't know that. We're not predicting that it would, but we can infer that this is a level of interest. And that played out, and it played out very strongly because we did basically trend lower all day today and engulfed yesterday's bar and almost got the gap fill from yesterday completed. Not quite, but we almost did close the gap here from Tuesday. Now, not much has changed, right? Today, of course, is very bearish action. You don't want to see that, especially if you're bullish. But for the technical picture, not a whole lot changed. I mean, you still have, and you have more reinforced, which I frankly like to see, of a clearer level. So this 199, 199.50, call it, that level is even more important now to the upside. That is just a very clear line in the sand that the bulls need to take out if they want to get any type of momentum or any type of real pep to their step. They're going to have to take that level out. So I like that that this level has been reinforced as our upside target to get bullish. So that is constructive. Otherwise, not a whole lot changed. We're still basically in this messy downtrend. We have overhead supply above us and moving averages are still racing lower. So, in that respect, I think tomorrow is going to be the more telling day. Do we continue lower, right? Do we start to retest these levels down here at 191? That's the very bearish scenario. Or can we now stabilize here, fill this gap, and can we bounce back and try and retest these highs here towards the end of the week? That would be the bullish scenario. So that's sort of where I'm at right now. I'm basically looking to see how we follow up this bearish day. Is this a one-day event, or can the bulls step in here, or are the bears just going to roll us back over? So I think on the downside, these lows here are very important. And to give you some context too, granted we had a down 1.35% day today, but if we look at the weekly chart, we're still up 1.13% on the week. So that's why you got to take everything into context here. I think again, the lows here down at 191 are very important. This would still effectively, and we still do have this potentially playing out, is a higher low scenario from 2 weeks ago's lows down here at 182. And I know these lows may not be real for some people, but we're going to go with it. So that's sort of where the immediate range is, this 191 level to today's highs. And I think that's still from a swing trading standpoint, it still remains very difficult. We had 4 longs on coming into today, ended with 3, and keeping things just generally light, only about 15 to 20% exposed to the long side right now. So that's the way we're navigating it. If we look at some other markets now, the Russell 2000, the IWM, again, similar situation. Gapped up above last week's highs and closed below it. Didn't quite get the full bearish engulfing candle here, but pretty darn close, and still at a level of interest, and all things basically apply here. Now the Qs a little more constructive, as they have been again, but still very close to that bearish engulfing bar, negated today's action and yesterday's action, and we're basically going to look for tomorrow to give us clues as to how we're going to progress from here. Now if we look at some other markets, TLT UNG had a very strong gap down today, and it basically just was bid up, trended higher all day. It was the exact inverse of the S&P 500. So this now is trying to reclaim, get back above this support level. It's going to be very important for TLT to do so. On the weekly chart, again, we've been talking about this pessimistic picture now ever since this bearish engulfing bar was put in 2 weeks ago. Let's see what happens with it. It's down 1% on the week. TLT would really have to get going above 123. That would turn things a lot more neutral to potentially slightly bullish if we could start to break above 123. Otherwise, still suspect of this one going forward. USO oil, terrible day today for oil. I'm still long this market. I'll tell you the reason why I'm long. Again, it goes back to the weekly chart here, with this being the signal bar, this bullish engulfing day with high volume. That was the signal bar. If you look at it here, we're still trading at the upper 80% or the top 20% of that bar. So for me, still hasn't negated my stop loss. I'm willing to give it a little more room. Of course, I hate today's action, but I'm going to give it just a little bit more room. Definitely want to see these lows here defended from last Wednesday down around 14.25. Sticking with it for now. Knew it was going to be a bumpy ride, and we're getting the bumps. So let's see how this one progresses, but still trying to hold this impulse leg higher here, and again, long-term damage chart in USO. If we look at UNG, again, this one's still holding on to this very important level. It's just crawling down here right around 1250 or so. These are very high stake levels for UNG because it has been basing out for so long, and it has found support there for multiple months. So I think a breakdown from these levels here would be very ugly for UNG, and I would be interested in shorting these once again. So that's where I stand on UNG. Let's look at some leading sectors. There aren't many, so it'll be really brief. Semiconductors still continue to hold up really well. Look at the positioning of these fast moving averages. They are below price. They are trying to race higher now in support price. Take a look at where we are relative to last week, for example. We're above last week's highs in the semiconductors, so we've made progress, and this is again holding up pretty well compared to most sectors. Of course, it didn't ignore the damage today. It was still down 1.5%, but again, still where some strength is trying to hold up. And then the next strongest really is the Dow Jones Transportation Index. This one holding up really well as well, above last week's highs. Fast moving averages are racing higher. Still got hit a little bit today, but overall holding up pretty well. Now let's look at some individual names. Now Apple, will start there. Had their event today. The street reacted negatively to it, but really it's just sort of in line with the market. Tough to expect too much. They had a lot of product announcements and all that fun stuff. So we'll see how it reacts going forward. Again, similar comments to the market apply. Let's see how they continue off this. I think the late levels here are very clear. Basically, today's highs above 114, and then down here below 107 in this 105 area would be the downside support area to hold on to. So just sort of range bound. Real messy trading right now in Apple. Doesn't look very actionable to me one way or the other. Google, this one very closed up pretty, held up pretty well today. Down, it was basically flat on the day, just down 10 basis points today. Closed right in between these moving averages, in between layers of support. I think, right here, the lows from this week and last week, 625 or so. On the upside, it's going to get it back above 670. Sandwiched here, let's see what happens, but it is tight relative to some other things, so it does seem pretty interesting going forward. Netflix had a nice bounce back today. This one's been under pressure recently. Really wide ranges developing here in Netflix, going all the way down to like $88 or so, which was basically the lows here from 2 weeks ago. On the upside, really up at 120, so 117, 118 level. So wide range in Netflix. Got to let this cool off. Fast moving averages still racing lower. Not too much for me to do there. Amazon, this one is the more constructive one. Again, this one closed basically flat on the day, trying to get above this level of interest here, right around 523 or so, which held as support for a few weeks post its last earnings release. So Amazon, trying to stay constructive. It's above the fast moving averages. I like it. It's still sandwiched between a lot of support, a lot of levels of supply, but really ultimately it's above 540. Above 540, I think, gets this one really moving, and going to be watching for that level in the next couple of weeks. Facebook, similar comments here, actually closed up 1% today, which is pretty nice, above the fast moving averages, trying to clear this overhead supply level here, get back above today's highs. $91 starts to get a lot more constructive in Facebook. Twitter, this one flat on the day. Again, the levels here have been sort of reinforced as we started to break down yesterday. I think this 29 zone, basically 29 to 30, all in here is effectively what Twitter needs to get back above to regain some confidence, get some momentum on its side. Still in a long-term damage trend. It has been that way since May of last year, of earlier this year, and Twitter, you know, kind of the same old right now. Nice session today, didn't give in, didn't roll over completely like yesterday's candle kind of left you wondering if the bears were just going to take this and just roll it back over. So got some hope in Twitter. Let's see what happens going forward. Alibaba continues to struggle, just in a very orderly downtrend, and that one sort of, again, this one continues to scare me just because it is fairly orderly. You know, it hasn't escaped the fast-moving averages that far. It's just been riding them lower, so comfortably trending down. Of course, let's see now if it can try and hold this $60 level. You know, we had a nice gap up today, up 5%, very impressive, but again, technically didn't change anything, just an inside day from yesterday's real bearish bar. So see what happens going forward in Baba. That one just, you know, still in a strong downtrend, needs more time. GoPro has been completely destroyed here in the past month or so. You know, what took 5 months to make in gains has now been erased and then some in basically a month of trading. So down 10% today. You can see what happens when you really start to break down below previous supply. There's not much volume that's traded down here, and really your only next level of reference is down around $29, which was basically the IPO day down here. Back from July of 2014. So it's really thin trading. I mean, it's effectively at, you know, 52-week lows. I mean, it is at 50. It's basically at all-time lows in my opinion, just because there's no volume down here, and you're seeing that now. 10% to the downside though. After such a beating here, you got to be close to capitulating some last-minute sellers here. It is oversold pretty significantly on a lot of metrics, but technically still very difficult to want to own this thing right here. So GoPro, look for a snapback, but that's about it. It's just would be a bear market rally if we do see that. Tesla holding up really well, one of the better ones that are holding up, supporting price, been tight price action. You know, you get a little mini area of interest here, basically at today's highs above 255, get you back into this overhead supply up here, up around 270, which is effectively the all-time highs in Tesla. So that's what I have for today. I don't have any trade ideas, mostly because I haven't gone through any scans yet. I will try and post some later today, but hopefully you enjoyed the video. Thanks for watching. I will catch you next time.